In the complex world of high finance, few figures command attention quite like William Ackman. A name synonymous with conviction, calculated risk, and a relentless pursuit of intrinsic value, Ackman's journey offers invaluable lessons for anyone seeking to master the art of investing. His approach transcends mere stock picking. It embodies a philosophy of deep understanding, strategic intervention, and an unshakable belief in one's own analysis. Today, we unravel the core tenets of his success, illuminating the path for your financial potential. Prepare to redefine your investment perspective. Ackman's impact extends far beyond the quarterly reports of Pershing Square Capital Management. He has reshaped how many perceive the role of an activist investor, proving that shareholder engagement can drive profound, positive change within companies. His story is a powerful testament to the idea that true influence stems from informed conviction, not just capital. For aspiring investors, understanding Ackman's journey provides a blueprint for building resilience and foresight, crucial qualities in today's dynamic markets. We explore how his legacy empowers you. Founded in 2004, Pershing Square Capital Management quickly distinguished itself under Ackman's leadership. It wasn't just another hedge fund, it was a platform built on the rigorous application of value investing principles, combined with an activist approach. Ackman believed that by taking significant stakes and advocating for change, he could unlock substantial value for shareholders. This model, demanding intensive research and unwavering commitment, set the stage for a career marked by both audacious victories and challenging lessons. It's a testament to establishing a clear mission. At its core, activist investing is about more than just buying shares, it's about buying a voice. An activist investor requires a significant stake in a company and then uses that position to pressure management into making changes they believe will enhance shareholder value. This can involve anything from operational improvements and cost-cutting to strategic shifts or even changes in leadership. Ackman epitomizes this approach, demonstrating how deep analysis, combined with a willingness to challenge the status quo, can reshape corporate destinies. It's a proactive stance in an often passive market. Ackman's investment philosophy is underpinned by an almost obsessive commitment to deep, fundamental research. He and his team delve into every aspect of a business, its financials, competitive landscape, management quality, and long-term prospects. This exhaustive due diligence isn't merely to find a good company, it's to build an unshakable conviction in an investment thesis. This level of understanding provides the fortitude to hold positions through market volatility and public scrutiny, a critical lesson for anyone aiming for sustained success. Cultivate your conviction through diligent inquiry. This rigorous research allows Ackman to see value where others might only see complexity or transient challenges. His team often spends months, sometimes years, dissecting a company before making an investment. They identify businesses with strong underlying fundamentals that are temporarily mispriced by the market. This isn't speculation, it's an informed bet on a company's true economic potential, backed by an extensive understanding of its operations. For you, this means understanding that true value often lies hidden, waiting for diligent investors to unearth it. Sharpen your investigative skills. The scale of Ackman's conviction is reflected in the substantial capital entrusted to Pershing Square. While exact figures fluctuate, his firm has consistently managed billions of dollars in assets, a testament to investor confidence in his strategy. For instance, Pershing Square's assets under management have often exceeded $10 billion, peaking at various times to more than double that. This isn't just a number, it represents countless hours of research, strategic planning, and the belief that a disciplined approach yields significant returns. Your own investment journey starts with disciplined capital allocation. Ackman is a staunch advocate for long-term investing, often deriding the short-term focus prevalent in much of the market. He emphasizes that true value creation takes time, rejecting the notion that quick profits are sustainable. His strategy involves identifying great businesses, investing with conviction, and patiently allowing the underlying value to materialize. This long-term perspective allows him to withstand market noise and temporary setbacks, knowing that fundamental strength will eventually prevail. Embrace this enduring vision for your own financial future, resisting the allure of instant gratification. Consider the profound difference patience makes. While others chase fleeting trends, Ackman remains anchored to his core thesis, allowing investments to compound over years. This often means enduring periods of underperformance or public skepticism, but the payoff can be substantial. It's a powerful reminder that the market often rewards conviction and patience, not reactive trading. For you, this translates to the wisdom of giving your investments the time they need to mature, trusting in the power of compounding and underlying business strength. Plant your seeds and watch them grow. Ackman possesses a keen ability to identify businesses whose market price does not reflect their true intrinsic value. This isn't about finding cheap stocks, it's about uncovering high-quality companies that are temporarily out of favor or misunderstood by the broader market. His process involves deep valuation analysis, understanding future cash flows, and assessing the durability of a company's competitive advantages. This skill is paramount in investing, recognizing a diamond in the rough before the crowd does. You can develop this vision by looking beyond headlines and focusing on fundamentals. While financial statements are crucial, Ackman's methodology goes further, seeking qualitative factors that contribute to long-term value. This includes evaluating the strength of a brand, the loyalty of a customer base, the effectiveness of corporate culture, and the foresight of management. These intangible assets often create an economic moat that protects a business from competitors and ensures sustainable profitability. For your investments, this means looking beyond mere numbers to understand the complete story of a company, anticipating its resilience in diverse market conditions. Dig deeper than the surface. The investment world often presents a stark dichotomy: the lure of short-term gains versus the promise of long-term compounding. Ackman unequivocally champions the latter. Short-term focus often leads to impulsive decisions, chasing momentum, and reacting to daily news cycles. In contrast, a long-term focus requires patience, conviction in fundamental analysis, and a willingness to ignore transient market noise. Your choice between these paths will profoundly shape your financial destiny. Learn to distinguish between fleeting opportunities and enduring value. Ackman is a quintessential contrarian. He's often willing to take positions that are deeply unpopular or misunderstood by the market, believing that true opportunity lies where others fear to tread. This requires immense courage, as going against the grain can expose one to significant criticism in periods of underperformance. Yet, it's precisely in these moments of widespread doubt that exceptional returns are forged for the patient and well-researched investor. Develop the mental fortitude to trust your own independent analysis, even when it diverges from the crowd. The history of investing is replete with examples of successful individuals who dared to think differently. Ackman embodies this spirit, showcasing how standing apart from the consensus can lead to outsized gains. His famous short bet against MBIA and his long position in companies like Chipotle, when they faced temporary headwinds, highlight this ability. It's about having the conviction to be lonely when your analysis suggests you're right, and the market is wrong. This discipline empowers you to unlock your own unique insights and chart a path to financial independence. Ackman keenly understands that financial markets are not purely rational, they are heavily influenced by human emotions, particularly fear and greed. He often seeks to exploit these psychological biases, buying when fear is rampant and selling when irrational exuberance takes hold. This isn't about predicting sentiment, but recognizing when it creates mispricings that fundamental value investors can capitalize on. Mastering market psychology allows you to remain calm amidst the chaos and make deliberate, rather than emotional, investment decisions. Cultivate emotional discipline for market success. Times of extreme market fear, such as financial crises or major economic downturns, often present the best buying opportunities for long-term investors. Conversely, periods of excessive optimism can inflate asset prices beyond their true worth, signaling a time for caution. Ackman's ability to navigate these emotional extremes, making bold moves when others are paralyzed, distinguishes his strategy. He demonstrates that a rational, disciplined approach to investing provides a powerful antidote to market hysteria. Empower yourself by understanding the rhythm of collective sentiment. Historical data consistently shows that market downturns, despite their initial pain, have historically presented prime opportunities for significant long-term returns. For example, major market corrections, averaging declines of 20 to 30%, have typically been followed by robust recoveries, often returning 50 to 100% in subsequent years. Ackman strategically positions himself to capitalize on these swings, turning fear into future gain. These periods of volatility, often perceived as threats, are actually incubators for wealth creation if approached with courage and foresight. See volatility not as risk, but as potential. One of Ackman's most publicized and contentious investments was his multi-year short position against Herbalife. In 2012, Ackman declared Herbalife a pyramid scheme and bet over $1 billion that its stock would go to zero. This wasn't just an investment, it was a public crusade, complete with lengthy presentations and media appearances. The Herbalife saga vividly illustrates his conviction, his willingness to engage in public battles, and the significant risks inherent in taking a deeply contrarian stance. This battle would test his resolve like few others, pushing him to his limits. Ackman's willingness to publicly articulate his investment thesis, even when highly controversial, sets him apart. He once stated, "Our investing is a public activity. We speak about our positions, so if someone wants to challenge it, we're not shy." This quote perfectly encapsulates his belief in transparency and the power of open debate to validate or refine an investment thesis. It's a bold approach that demands absolute confidence in one's research and the courage to defend it vigorously. Embrace the clarity that comes from articulating your beliefs, even when challenged. Ackman's thesis against Herbalife rested on the assertion that it was a multi-level marketing company built on deceptive practices, with distributors primarily profiting from recruiting new members rather than selling products. He meticulously detailed how he believed its business model was unsustainable and harmful to participants, predicting its eventual collapse. This comprehensive and publicly presented case exemplified his deep-dive analytical style, forcing a global conversation about the ethics of such business structures. His detailed arguments underscore the power of rigorous, evidence-based critique. The Herbalife short became a grueling, multi-year battle, costing Pershing substantial sums and subjecting Ackman to intense public and professional pressure. Yet, he never wavered, consistently reaffirming his conviction despite mounting losses and counter-arguments from other prominent investors like Carl Icahn. This period highlighted Ackman's extraordinary resilience, his capacity to absorb setbacks, maintain focus, and persist in the face of overwhelming opposition. Your own investment journey will undoubtedly face headwinds. His example demonstrates how to stand firm. During the Herbalife saga, Ackman faced relentless media scrutiny, criticism from peers, and even regulatory investigations that ultimately found against his claims of fraud. Despite the enormous financial and reputational stakes, he maintained his public stance, continuously presenting new data and defending his thesis. This unwavering resolve, even when the market and public opinion were against him, is a hallmark of his character. It teaches us the importance of independent thinking and the courage to endure the lonely periods that often precede eventual vindication, or at least profound learning. Develop your inner strength. The Herbalife short cost Pershing hundreds of millions of dollars, with reported losses ranging from $500 million to over $1 billion before Ackman finally exited the position. While painful, these substantial losses serve as a powerful reminder that even the most well-researched convictions can be wrong or take far longer to materialize than anticipated. The ability to admit error, learn from it, and move forward is crucial. For instance, a reported loss of $700 million on the Herbalife bet underscores the high-stakes nature of activist investing. It's a steep tuition in market realities. Ackman's career, like any truly impactful one, is not without its missteps. The Herbalife and Valiant investments, while deeply researched, did not yield the anticipated results. Yet, it's precisely these experiences that offer the most profound lessons. Ackman has openly reflected on these challenges, demonstrating that true mastery isn't about avoiding failure, but about extracting invaluable insights from it. For you, this means viewing every setback as a learning opportunity, a chance to refine your strategy and emerge stronger. Your resilience is forged in these fires. The lessons learned from difficult investments have visibly shaped Ackman's later approach, leading to a more focused and arguably more measured strategy. He emphasized a renewed focus on simpler, more predictable businesses with strong cash flows, shifting away from highly leveraged or complex short positions. This evolution underscores a critical truth: adaptability is key to longevity in investing. Your journey will similarly demand continuous self-assessment and a willingness to adjust your sails, transforming past challenges into future triumphs. Let experience be your greatest teacher. Another significant challenge for Ackman was his investment in Valeant Pharmaceuticals, a company that pursued growth through aggressive acquisitions and price hikes. While initially promising, the strategy proved unsustainable, leading to regulatory scrutiny, massive debt, and a dramatic stock collapse. Pershing Square suffered substantial losses on this position. Valeant provided a harsh, yet critical, lesson about the perils of excessive leverage, complex financial engineering, and the importance of ethical business practices. It solidified his pivot towards simpler, high-quality, cash-generating companies. Embrace simplicity over undue complexity. Despite his reputation for bold, concentrated bets, Ackman is also a master of strategic risk management. This isn't about avoiding risk entirely, but understanding it deeply and hedging against catastrophic outcomes. His approach involves anticipating potential threats to his portfolio and employing targeted strategies to mitigate their impact. This foresight allows him to maintain conviction in his long-term holdings even when black swan events threaten the market. Learn to both embrace calculated risks and protect your portfolio with intelligence and foresight. A prime example of Ackman's strategic risk management was his brilliantly executed credit hedge in early 2020. Recognizing the looming threat of the COVID-19 pandemic, he purchased credit default swaps on investment-grade and high-yield corporate bonds. This relatively small bet protected his portfolio from a market downturn and generated a staggering profit of $2.6 billion on an investment of just $27 million, perfectly illustrating opportunistic hedging. This move not only preserved capital but also provided liquidity to re-enter the market at attractive valuations. Your foresight can yield similar protections. The COVID-19 hedge perfectly demonstrates how a small, well-placed bet can yield extraordinary returns when foresight meets market dynamics. Investing just $27 million, Ackman secured a profit of $2.6 billion in a matter of weeks. This represents a return of over 9,500%, an astonishing figure that highlights the power of a deeply understood, uncorrelated hedge. This wasn't luck, it was the culmination of diligent analysis, macroeconomic insight, and decisive action under pressure. Imagine the security this kind of strategic thinking can bring to your own portfolio. One of the most valuable lessons from Ackman is the concept of opportunistic capital deployment. His ability to generate substantial cash from the COVID hedge allowed him to aggressively buy into high-quality companies at depressed valuations during the subsequent market dip. This wasn't merely recovering losses, it was actively seizing an unparalleled opportunity to supercharge his portfolio's future growth. This strategic agility, fueled by a prepared mind and available capital, is a cornerstone of exceptional investing. Position yourself to capitalize when others retreat. The period following the March 2020 market bottom saw Ackman deploy his newly acquired capital into some of the market's most compelling businesses, including Restaurant Brands International, RBI, Hilton Worldwide, and others. These were companies with strong brands, durable competitive advantages, and robust free cash flow, now trading at attractive prices. This disciplined reinvestment is a textbook example of buying when the street is fearful, demonstrating how preparedness can transform crisis into unparalleled opportunity. Cultivate the readiness to act decisively when conditions align. Post-Valeant and Herbalife, Ackman refined his strategy, increasingly focusing on simple, predictable businesses with strong competitive advantages and robust free cash flow. He seeks companies that are easy to understand, have long growth runways, and possess pricing power. This pivot emphasizes resilience and compounding over speculative growth. Examples like Chipotle, Restaurant Brands International, and Hilton showcase this refined focus, demonstrating a preference for quality over complexity. Embrace simplicity and stability in your own investment choices for long-term compounding. This focus on simple, durable businesses aligns with what investors call compounders, companies that consistently grow their earnings and cash flows over time, allowing capital to compound exponentially. Ackman looks for businesses that can reinvest their profits at high rates of return, thereby driving shareholder value without needing constant market re-rating. This strategy is less about dramatic, short-term price movements and more about owning a piece of a consistently growing enterprise. Aspire to own businesses that work tirelessly to grow your wealth, year after year. What defines a quality company in Ackman's eyes? It often boils down to several key characteristics. Firstly, a strong competitive moat, protecting it from rivals. Secondly, robust free cash flow generation, enabling self-funding and shareholder returns. Thirdly, a management team with integrity and a proven track record. Finally, a business model that is simple to understand and has a long runway for growth. These aren't just arbitrary criteria, they are the bedrock of sustainable, long-term value creation. Look for these pillars in your own investment selections. Ackman understands that even the best business model can falter under poor leadership. He places immense importance on the quality, integrity, and alignment of a company's management team. He seeks leaders who are excellent capital allocators, possess a deep understanding of their industry, and have a significant personal stake in the company's success. This alignment of interests ensures that management decisions are made with shareholders' long-term prosperity in mind. Partner with leaders who inspire confidence and share your vision for growth. Ackman's activist approach, when successful, transforms him from a mere shareholder into a true partner with management. By influencing strategy, governance, and capital allocation, he helps unlock latent value. This collaboration, however, only works when there's mutual respect and a shared vision for the company's future. It underscores that investing isn't just a solitary endeavor, it can be a powerful force for corporate improvement. You too can seek out companies where your values align with leadership, fostering a true partnership for shared success. In an era of ubiquitous information and echo chambers, Ackman's career is a testament to the absolute importance of independent thought. He rarely follows the herd, choosing instead to rigorously question assumptions and forge his own path based on his team's proprietary research. This intellectual autonomy is crucial for identifying mispriced opportunities that the consensus overlooks. For you, this means developing a robust framework for critical thinking, cultivating the ability to evaluate information objectively, and trusting your own well-reasoned conclusions. Dare to think differently. The financial markets are constantly bombarded with news, rumors, and expert opinions that can easily sway less disciplined investors. Ackman's success lies in his ability to filter out this noise and focus on what truly matters, the underlying business fundamentals. He demonstrates that a strong internal compass, guided by deep research, is far more reliable than reacting to daily headlines. This discipline empowers you to make rational decisions, impervious to the emotional roller coaster of public sentiment. Develop your focus and ignore distractions. Ackman often distills his investment philosophy into clear, actionable principles. One such insight is, investing is a business where you can look very silly for a long period of time before you are proved right. This quote highlights the patience and mental resilience required to succeed in markets where conventional wisdom often dictates short-term gratification. It's an encouragement to stand by your convictions, knowing that fundamental value will eventually assert itself. Embrace the journey, and trust in your diligent process. The world of finance is in constant flux, demanding that even seasoned investors commit to continuous learning and adaptation. Ackman's career trajectory, marked by strategic shifts post-challenging investments, exemplifies this principle. He consistently re-evaluates his approach, incorporates new insights, and refines his investment criteria to suit evolving market landscapes. This willingness to learn from both successes and failures is critical for long-term survival and prosperity. Foster a growth mindset, always seeking to expand your knowledge and refine your strategies. Staying ahead in investing isn't about finding a single, static formula, it's about continuously sharpening your analytical edge and adapting your strategies. Ackman has shown that while core principles like value and long-term focus remain, the application must evolve. This means being open to new types of businesses, new market structures, and new ways of assessing risk. Your investing journey is a dynamic one, requiring ongoing curiosity and a commitment to personal and professional growth. Embrace the endless possibilities of refining your investment acumen. A distinctive aspect of Ackman's activist investing is his commitment to clear, articulate communication. He invests heavily in presenting his investment theses to the public, shareholders, and media. This transparency, while sometimes controversial, helps garner support for his proposals and provides clarity on his strategic intentions. It demonstrates that effective communication is not just a soft skill but a powerful tool for driving change and building consensus in the investment world. Hone your ability to articulate your vision, for clarity inspires confidence. Ackman's detailed presentations, sometimes spanning hundreds of pages, meticulously lay out his investment arguments, complete with financial models, competitive analyses, and strategic recommendations. His ability to distill complex financial concepts into understandable narratives is a masterclass in persuasion. This skill not only influences public opinion but also rallies shareholders around his vision for corporate improvement. For your own financial endeavors, mastering the art of clear explanation can elevate your ability to convince, lead, and succeed. Speak with precision and purpose. Ackman's strategies, though implemented at an institutional scale, offer profound lessons for retail investors. Institutional investing often involves large capital pools, dedicated research teams, and direct access to management. Retail investing, on the other hand, relies on publicly available information and personal capital. However, the core principles, deep research, long-term perspective, and independent thought, are universally applicable. Your ability to apply these professional-grade insights, regardless of your capital size, is your competitive advantage. Bridge the gap between theory and practice. Even after decades of experience and monumental successes, Ackman demonstrates a crucial trait for long-term investing: humility. He has openly acknowledged errors, learned from missteps, and adjusted his strategy accordingly. This humility isn't weakness, it's a profound strength that prevents overconfidence and encourages continuous improvement. The market has a way of humbling even the most brilliant minds, making a modest and adaptable mindset essential for survival and growth. Embrace humility as a cornerstone of your enduring financial wisdom. The future is inherently uncertain, and the most successful investors understand this deeply. Ackman's strategic hedges, like the one in 2020, are not predictions of certainty but acknowledgments of potential risks. He prepares for multiple outcomes, rather than banking on a single, linear future. This acceptance of uncertainty allows for robust portfolio construction and flexible decision-making. For you, this means building a resilient financial plan that can withstand unexpected shocks, turning potential vulnerabilities into opportunities for growth. Plan not for certainty, but for adaptability. Ackman's long-term success isn't due to flashes of brilliance but to a highly disciplined, repeatable investment process. This includes stringent criteria for selecting companies, a systematic approach to valuation, and a clear framework for monitoring existing investments. Such a process minimizes emotional decision-making and ensures consistency, even during times of market stress. It is the bedrock upon which sustained, compounding returns are built. Cultivate your own disciplined approach, transforming sporadic efforts into a powerful, consistent engine of wealth. While the media often highlights his boldest moves, Ackman's steady, consistent application of his core principles is what truly drives his returns. He avoids impulsive reactions to market noise, instead relying on his established framework to guide decisions. This consistency breeds predictability, a rare and valuable asset in the volatile world of finance. For you, this means prioritizing a well-thought-out plan over sudden impulses, building a foundation of reliability that compounds over time. Let consistency be the engine of your financial progress. To adopt an Ackman-esque approach, your fundamental analysis should encompass several key steps. First, deeply understand the business model and industry landscape. Second, meticulously analyze financial statements for revenue, profit, and cash flow trends. Third, assess management quality and corporate governance. Fourth, evaluate competitive advantages and potential risks. Finally, perform a thorough valuation to determine intrinsic value versus market price. These steps are your roadmap to informed investment decisions. Master each step to elevate your financial acumen. The lessons from William Ackman are not reserved for institutional investors or hedge fund managers. They are universal principles that you can apply to your personal investing journey, regardless of your capital size. Start by cultivating deep knowledge about the companies you consider. Resist the urge for short-term gains, favoring long-term compounding. Develop the courage to think independently, and most importantly, learn from every success and setback. Your personal portfolio can become a testament to disciplined, informed decision-making. Build your own legacy of smart investing. Beyond specific strategies, Ackman teaches us to cultivate an investor's mindset, one of perpetual curiosity, unwavering conviction, and resilient adaptability. It's about seeing market fluctuations not as threats, but as opportunities, viewing setbacks not as failures, but as invaluable lessons. This mental framework empowers you to navigate complexity with confidence and build wealth systematically. Develop this mindset, and you'll find yourself not just investing, but truly understanding and mastering the forces that shape your financial future. Unlock your full potential as an investor. At the heart of Ackman's philosophy is an unwavering belief in intrinsic value. He argues that the market price of a security often deviates from its true underlying worth, creating opportunities for those who can accurately assess a business's long-term earnings power and assets. This focus shifts attention from transient market sentiment to the fundamental economic reality of a company. By understanding intrinsic value, you gain an anchor in the storm of market volatility, empowering you to make decisions based on substance, not fleeting emotion. Anchor your investments in enduring value. The market is a voting machine in the short term, but a weighing machine in the long term, as Benjamin Graham famously noted. Ackman consistently demonstrates this principle by acquiring companies when their market price, the vote, is significantly below their calculated intrinsic value, the weight. He patiently waits for the market to eventually recognize this discrepancy, often catalyzing that recognition through activist engagement. This fundamental distinction between price and value is a cornerstone of intelligent investing. Train your eye to see beyond the daily fluctuations to the enduring worth. Inspired by Warren Buffett, Ackman places immense importance on identifying companies with strong economic moats. These are sustainable competitive advantages that protect a company's profits and market share from rivals. Moats can come in various forms: strong brands, patents, network effects, high switching costs, or cost advantages. Investing in companies with deep moats ensures long-term durability and predictability of earnings, making them ideal compounders. Seek out businesses with impenetrable defenses, as these are the ones that will truly withstand the test of time and competition. A company with a sustainable competitive advantage can consistently earn high returns on capital without being eroded by competition. This is a critical factor in Ackman's selection process for his long-term holdings. He seeks businesses that, despite economic cycles or technological shifts, retain their core value proposition and pricing power. Examples like Universal Music Group, with its vast catalog and artist relationships, perfectly embody this. Your focus should be on identifying businesses built to last, providing a resilient foundation for your wealth. Build your portfolio with enduring strength. Beyond just identifying undervalued assets, Ackman's activist strategy often involves actively working with management to implement operational improvements. This can range from streamlining processes and cutting unnecessary costs to optimizing capital allocation and refining product strategies. His team doesn't just critique, they often provide actionable insights based on their extensive research and industry knowledge. This hands-on approach directly contributes to unlocking shareholder value, proving that engagement can be a powerful catalyst for growth.
drive value by driving positive change. Ackman's track record includes instances where his firm's advocacy directly led to significant operational overhauls, divestitures of non-core assets, or strategic refocusing within companies.
For instance, his engagement with Canadian Pacific Railway led to a dramatic turnaround, highlighting the profound impact of effective shareholder activism.
This demonstrates that an engaged investor can be a force for good, pushing companies towards greater efficiency and profitability, ultimately benefiting all stakeholders. Your informed voice can contribute to better governance and performance. A cornerstone of value investing, and a principle Ackman adheres to, is the margin of safety. This means buying assets at a price significantly below their intrinsic value, providing a cushion against potential errors in analysis or unforeseen market downturns. It's a protective buffer that minimizes risk and enhances the probability of favorable returns. The larger the margin of safety, the greater your protection. Always seek to acquire assets at a discount, safeguarding your capital and amplifying your long-term returns. Build in resilience from the start. Life and markets are full of surprises. A generous margin of safety ensures that even if a company faces unexpected challenges or if your valuation proves slightly optimistic, you still have room for profit, or at least to avoid substantial losses. This principle prevents overpaying for assets, a common pitfall in bull markets. By diligently applying a margin of safety, you are essentially insulating your portfolio from many of the unpredictable aspects of investing. Give yourself the advantage of preparedness, ensuring your financial journey remains robust amidst uncertainty. Ackman's investment theses, while backed by complex research, are often distilled into remarkably simple, understandable narratives. He champions clarity, believing that if you cannot explain an investment idea concisely, you probably don't understand it well enough. This simplicity allows for easier communication, greater conviction, and a clearer path for action. Avoid unnecessary complexity, seek the elegant solution, the clear narrative that cuts through market noise. Let simplicity be your guide to profound understanding and impactful investing. Whether it's his conviction in a beloved brand like Chipotle or his critique of a multi-level marketing scheme, Ackman's public statements often cut to the core of the issue with compelling directness. He avoids jargon where possible, focusing on the fundamental merits or demerits of a business. This ability to articulate a clear, concise, and compelling argument is a skill invaluable to any investor, enabling better decision-making and fostering greater confidence. Practice distilling your thoughts into potent, understandable insights, becoming a master of your own financial narrative. In a market dominated by consensus and herd mentality, Ackman's career reinforces the paramount importance of trusting your own rigorously informed judgment. While seeking diverse perspectives is crucial, ultimately, the decision to invest, and the conviction to hold through adversity, must stem from your internal conviction. This self-reliance is a key differentiator for truly successful investors. Develop an unshakable faith in your analytical capabilities, empowering you to navigate market noise and make independent choices that align with your long-term goals. Your investment journey is ultimately your own. While mentors and models like William Ackman provide invaluable guidance, the responsibility and the rewards belong to you. He demonstrates that becoming the architect of your own financial success requires diligence, courage, and a commitment to continuous self-improvement. It means building your own framework, making your own decisions, and taking ownership of your outcomes. Step into this role with confidence, knowing that your potential for wealth creation is limitless when guided by strong principles and unwavering resolve. William Ackman's journey through the pinnacles and valleys of finance offers a compelling narrative of what's possible when intellect meets unwavering conviction. His dedication to deep research, strategic activism, and long-term value provides a powerful blueprint for investors at any stage. You have the capacity to apply these very same principles, to approach your investments with greater insight, resilience, and a profound understanding of underlying value. The market is a canvas, and with these lessons, you are poised to paint your own masterpiece of financial success. Embrace this wisdom. Now is the time to transcend passive observation and become an active participant in your financial destiny.
Take these lessons from William Ackman: the emphasis on deep fundamental research, the courage of contrarian thinking, the wisdom of long-term patience, and the resilience to learn from every experience.
Start applying them today. Dive into financial statements, question conventional wisdom, and cultivate your own unwavering conviction. The journey to financial mastery is within your grasp.
Empower yourself and begin building the resilient, prosperous future you deserve, starting now.